Good morning, good afternoon, good evening, depending where you are on the planet. And welcome to the late running. My apologies, late running. We had some tech issues at my end in here. So I had to do a full shutdown and restart. So we're running 10 minutes late in here. My apologies. I hope you guys are still on. But tech's great when it works, not so great when it doesn't. But welcome to the Monday, the 17th of October, Bull versus Bear webinar with Steve Miley on the call for trade day. Happy Monday indeed, Jason. So, welcome everyone. We're going to go for our usual regular run through with a slight change on the Monday of taking a look at the bigger picture of the week, what I like to call the shape of the week, to see where the kind of trigger points might come a little bit further in the week. Even though we are day trading at trade day, I think it's important to have an understanding of what's coming up because it could affect the volatility for today because of what's coming up tomorrow or later in the week. So it's certainly something to bear in mind, and I think it's good practice to do that. So we'll take a little look back at what we've had, what we've got coming up. We'll take a look at what's impacting markets right here, right now. We'll take a look at the calendar, what we've got coming up today, this week, and also not only on the macro calendar, but the micro calendar, the earnings calendar, what potential earnings might impact on markets, on the indices from the bigger corporates that might be reporting over the next week. We'll also take a look at, say, articles from the major news wires on the macro fundamentals that are shaping markets right here, right now, and also take a look at the charts to see where the potential trigger points are going into today. Right, let's take a look back first of all. Well, two things have been dominating markets in here over the last week, really. One has been the UK. Excuse my language, but the shit show that's been going on in the UK over the last few weeks in here. We'll talk about that shortly. From the US side, the dominant thing was obviously the CPI data last week. A huge day. We spoke about that at length on Friday. So here we have it here. Look, the S&P 500 on Thursday was down 2.4% at its lows, then closed up 2.6%, the fifth largest intraday reversal from the low in the history of the S&P. It was the fourth largest intraday reversal from a low for the Nasdaq. So a big turnaround day. As you know, on Friday I was very bulled up. I remain quite bulled up. Okay, I do think there's a very strong chance, and by strong chance, if I put my analyst hat on, I'll say 65% chance that the low has been put in. If I'm putting my investing or swing traders hat on, I'm more positive. I'm not gonna sit on the fence as much. I think there's a good 70-75% chance that Thursday's low could be the low. And I'm putting my own longer term money, and I've got swing trades on, backing that fact that I think that the low was put in on Thursday. However, I did say on Friday that I also thought that the markets would rally quite impulsively to the upside. In fact, what we saw was the opposite of that, and the markets kind of gave up a lot of the gains. So if you look at net where we were, so we were like Thursday 2.5% down, 2.5% up, and then Friday we gave like pretty much the 2.5% up bit back again. So we kind of finished up on Friday on most of the major indices, pretty much where we left off from pre the CPI number, or like from Wednesday evening's closes. So markets kind of not building on Thursday's intraday rebounds on the stock side. And if we looked elsewhere, you actually saw far more bigger reversals. So, for example, gold actually went back down and made a new low below the low that we posted on Thursday. So, turned that around completely, gave up all of Thursday's gains. Similarly, oil did the same thing. And the dollar, which obviously had signaled gone the other way, signaled a more of a bearish signal, has gained a lot of its losses back on Friday, more than we saw, say, on the opposite, on the sell-off that we saw on, say, the equities on Friday. So, other markets were even more significant with their reversals back the other way, back to kind of risk off that we saw on Friday. So, can't get it right all the time. Got that wrong on Friday. I still feel, though, that we're going to defend those Thursday lows on the stock indices, and then markets can go higher. But time will tell on that one. So that was the big event from the end of last week. The other thing, we've had earnings season kicked in. Now, we looked at it last week. If we go and take a look at earnings season, I'm going to go back to, I don't think I can just easily go back to last week. Actually, yeah, I can just go into the calendar. If we go take a look at last week's earnings season, I've already got this filtered for the big guys. So you remember on the filter in here, guys, you come in, you tick the 3. Okay, the 3 stars, just get, because we're only looking at unless you're trading the individual stocks, we're only looking at what's impacting the indices. And you look at here, it's green, right? Look, there's hardly any red, really. And the big guys that we had reporting from the financials from Thursday, you see here BlackRock, green. And then the only kind of red you get is from Morgan Stanley on their revenue side, a slight miss, but everywhere else is green from last week. If we go into this week, again, it's filtered. We've already had Bank of America already posted strongly, above expectations here. Bank of New York Mellon also published above expectations. Going into this week, so what else do we have? Johnson & Johnson, the big one I think to watch for the week, Netflix, okay? Not as big as, say, Johnson & Johnson, but very much a big reactor for the market, a big reaction from the broader indices. Netflix is seen as a bellwether of not only the US consumer, but the global consumer. Okay, is the global consumer backing off? So given the interest rate hikes and the inflation rates that we're seeing globally, is that having an impact on the consumer? Are they cancelling or not? Are the Netflix subscriptions not rising as predicted? So that's going to be one to watch definitely tomorrow. We also have, so Johnson & Johnson, I'll just segue into this and then we'll come back to looking at the recap. So those are the big ones really in the next couple of days. Bank of America already had, Johnson & Johnson, Netflix, Goldman Sachs also tomorrow. Further on, Tesla, that could be a biggie for the major indices. And Procter & Gamble also on Wednesday. Also Abbott Labs, ASML, chip company. We'll be watching those. And going into the end of the week, it kind of tails off a little bit. So none of these, I think, are going to really impact the major indices too much. So, yeah. So that's Thursday. Sorry, going down onto Friday. Verizon, potentially. So American Express as well. So, yeah, we've got getting well into earnings season now. We're certainly going to be watching that. But they've been a sea of green, really. So corporate earnings actually doing better. Okay, obviously a lot of these revenue and EPS forecast numbers have been dialed right back, okay, because of, by the analysts. So the consensus numbers are lower anyway, but nevertheless, if you beat consensus, that's a positive. So yeah, we've got that going on this week. So yeah, that was the earnings season from last week. CPI we discussed. And the UK, I've got a load of articles about the UK, basically big U-turns on Friday. The Prime Minister, she fired the Chancellor of the Exchequer, which is like the Treasury Secretary, runs the economy. Got a new guy in, Jeremy Hunt, and he's basically undone pretty much everything that was done in that mini budget that caused all of these problems. Since he's been in, since Friday, he's been on the press all over the weekend, and they're basically just wound back on everything. And he's effectively taken over. And there's strong talk that the Prime Minister will be gone very soon, even though she's only been just put in place. Because from within our own party, there's a lot of ructions coming in from a party. Now, the reason I'm talking about this, and you guys are he's going on about the UK just because you're British, Steve. Stop going on about the UK. Yeah, I'm not doing it because of that. I rarely talk about the UK, because it's not important for global financial markets. In this case, as we've discussed, it is and has had an impact. So much that Biden has mentioned it more recently, the negative contagion impact of what came through from the UK. So it is important. Okay, we've spoken about what's happened to the market. So you got the stocks rallied, dipped on Thursday, rallied Thursday, and then gave back on Friday. US yields, though, overall went higher. We go down here, look at the charts. US yields continue to climb. So we are kind of sideways in here. If you look at the S&P and the DAX, the dollar continued to climb, closed at a weekly high, the dollar index. The pound is kind of sideways in here, but gold gave up a lot of those gains. Gold was lower, oil was lower, looking like rebound failures for gold and oil. So they're still looking more negative. Copper was kind of more sideways. Let's step in and take a look at this is the daily calendar now, looking forward to the week. Actually, let's go back to that and I'll just go run through The data for the week and the central bank activity is super light. So I think the focus is going to be on those earnings. I've already run through the earnings, but data's light. We have, nothing really hardly at all from the US all week. I mean, it's so light from the US. We had Chinese trade data overnight. We've got RBA meeting minutes, Chinese GDP and retail sales, German ZEW survey, UK Canadian CPI, Australian employment report, the People's Bank of China interest rate decision, and then Canadian retail sales. The US data is extremely light this week. And then say you've got, RBA, Reserve Bank of Australia meeting minutes and People's Bank of China. Remember, the RBA meeting minutes are going to be those meeting minutes from when they pivoted. So that could be interesting. But yeah, so it's a very light calendar. We look at the calendar for today, nothing in there from the US to really light us up today. Overnight we've got Chinese GDP, as already mentioned in here, but nothing really in here of note. And if we go into tomorrow, in the US side in here, again, it's like capacity utilization, industrial production, not really big pieces of data in here that are going to significantly move markets. So there could be a big focus on those earnings numbers. 5 things to start your day. Let's take a look at some of the macros. St. Louis President James Bullard left open the possibility that the central bank would raise interest rates by 75 basis points at each of the next 2 meetings in November and December. Remember, we've been watching the Fed Watch tool is pretty much nailed on. There's the next meeting, almost 100% that we're going to go for a 75. Remember, we actually dipped across to the 100. If you go to the meeting afterwards now, over here, look, so we've got up to now 450. So there's a biggest chance now. This is 150 basis points up. So now starting to price in to 75 basis point rate hikes into the end of the year. And then we've discussed before, though, the peaking rates now moving slightly higher. So 475 to 450. Then I'm looking for the peak to come, 474. 450, and we're looking at 450, 475. So another rate hike, maybe going back down to 25s at the end of, the beginning of next year, and then peaking rates looking to peak out at that point there, and then not looking for rate hikes until the very end of next year. Rate cuts until the very end of next year. So maybe 275s, potential. Hinted at by Bullard overnight. Okay. So what else we have in here? The pound of UK bond surged in here, so we've got a load on that. So basically, they've undone. This is Jeremy Hunt now. He's the new chancellor. This guy on the right, who's streaming actually from Bloomberg. He's basically undone everything. Okay, pretty much. Okay, he's pretty much reversed pretty much everything in here, and and at 10:30 New York time, we're going to get more details from him. And winding back now, coming in and doing a lot of government spending cuts. And it is having an impact. It's grabbing the headlines everywhere. We'll look at some of those in a minute. Your investors are looking beyond the looming global recession, and they see the US and its financial emergence strongest. Okay, so futures rebounded in here this morning. And we've got very little on the data front. The reason I've got this article I have here, oil steady as recession fears counter positive Chinese here. So it's not so much I'm looking at the oil prices being steady, but this Chinese in here, Chinese central bank rolled over maturing medium-term policy loans on Monday while keeping the interest rate unchanged for a second month in a signal that the central bank would continue to maintain loose monetary policy. So a loose monetary policy signal in here from China. Wall Street futures edging higher this morning, focused on earnings. We've spoken about that. Here's that UK 10-year gilt chart. Okay, so in here, if I go to in here, it's not a very good chart. Let's go to the interactive chart, see if that's any better. But you'll see gilt yields in here continuing to track lower. Do you remember we looked at this the end of last week? Okay, so you got that big sell-off, you got a rebound back on then Thursday through Friday, and then Friday a big move back lower in yield this morning. Okay, lower in yield, remember higher in prices, and then look, potentially a double top pattern building here on UK gives a big double top. So that would actually point us down to lower yields in here. And this has been part of the thing that's driving yields high. A part of the concern that we've had for global, okay, was this spike high, this massive move that we accelerated. Around here was where we had the budget, okay, that mini budget, right? So we went from like 328 up to like 460. Boom, massive spike in yields, and a real risk that we're going to be pushing still lower in yields. Okay, so in UK, you get finance versus tax plans, raids in energy support, Europe edges higher. By Europe, it means European stock indices edge higher. UK does U-turn, settling nerves. So this contagion effect is easy. Pound and UK bonds rally, bonds up, gilt up, lower yields, and US stock futures advance. Okay, so this is helping stuff globally. Okay, helping riskier assets globally, and pound rally trades are shifting fiscal stance. So all of this coming from the UK over the weekend and through this morning. So it has helped European bourses this morning. You can see up about between 0.5% and 1%. The FTSE, the UK index, is up about 3/4. The FTSE 250, the next 250 biggest stocks from 101 to 350, is up nearly 1.5% today. And then the RSA European exchange is up about 1%. You see the CAC, the French index, 0.8. The DAX, the German index, up nearly 1% this morning. If we go and take a look at the US, so obviously US we closed back lower on Friday, but this morning similar strong bounces in here, gaining back. So this is bolstering my view, that view, even though we gave back about 2.5% back on Friday after having that big intraday bullish rebound on Thursday, we gave back, and now we're climbing back high this morning. So keeping the underlying positivity in place. We've already looked at the Fed Watch tool. Let's go take a look at the chart. So there's that rebound. So there's Thursday strong. This is the S&P first of all. Big spike below the early October low. Big turnaround rebound. Massive day back on Thursday. Then giving, so you look where we closed on Friday at the end of the week. We pretty much closed where we started on Wednesday, right? So it wiped out. All of Thursday's activity was wiped out. But then look, rebounding stronger. We're back, nearly got half of back what we gave back on Friday. And looking bullish again in here. And I'll step to the NASDAQ daily. Similar story on the NASDAQ. So that strong Thursday, giving back a lot of it on Friday and now rebounding again. Let's step in back to the S&P and go to the intraday chart. So there's the whipsaw Thursday, the initial sell-off on the data, the strong recovery rally. We went higher and then gave it up on Friday, right? But then look at this really decent grind back higher in here that we've had throughout today, and some of this is being helped by, say, that kind of the positivity we're getting from the European exchanges because of the U-turn that we're seeing from the UK. Okay, so that's helping markets higher. These have been rallying in here since we opened pretty much last night. Okay, on the back of that. Okay, I think this is an important trigger point. The sell-off here was the sell-off from Friday. You can see the market sold off, consolidated, and went lower again. You see the swing high there. I think that's going to be important. Let's get rid of the Fibonacci there. That swing high there. If we can clear above there, I think that's going to be an important swing high. That's up at 36.56.75. So watching out for that on the top side going into today. I think on the lower side, it needs to hold this grinding trend line. If we break through there, and that's going to be around 36.28, 27 in here, down through there today. Certainly below these little lows in here, back below 36.23, and certainly below that spike low at 36.16. So there's a number of levels there. You've got the trend line around 28. You've got the little swing low here at 23.25, and then you've got that spike low there at 16.5. Those are the triggers on the downside for this to turn more bearish. On the upside, is looking fairly positive to me still. And, above that high there, as I say, top side 56.75 is going to be the important trigger. Could be back up to the highs. Okay. NASDAQ, similar story. There's the grind back higher. Okay. And there's the, sorry, one second, guys. Get rid of that. And then, here's the grind back higher. We're taking about through some resistance here from Friday. There's the similar spike consolidation swing high back from Friday. On the NASDAQ, that is up at 10,971.5. Through there, looks more positive. On the downside, if you look at the support that we have, trend lines coming in around 850. You've got the little swing low here, just below there. Actually about the same point. So where is it? Sorry, in here. 838.75, about 850 on the trend line, and then that spike low on the downside, 810.5. So those are the trigger points on the downside. Top side is that one up there, I would say. Or you've got the current high before that. You got the high is 10,916.75, but I think more importantly that one there up through 71971.5 makes it all look a lot more bullish on the NASDAQ. Quick nod to gold and oil, and then we'll wrap up. So gold in here, as I said, look, so gold, you had the same on Thursday, you had the same rebound, right? The intraday rebound, the sell-off and the rebound, but it wasn't quite as bullish on gold, on the extension on the upside. And then gold gives it all up on Friday, and we are bouncing. But you got to say gold stays negative overall, I would say. Even though now, if stocks continue to rebound, it's going to go with stocks above that peak there. I think for gold, again, this goes back to Fridays. 69.8 above 69.8 for gold, it starts to look more bullish. I'd be looking to probably fade this though, but again, if stocks go up, this is going up, right? But you can see there is a dislocation between the correlation, because definitely Thursday through Friday, this gold's far more damaged than stocks were, Thursday through Friday, although saying that, we didn't undercut the September low yet, so kind of mixed from gold. So yeah, I mean, I think at the moment, I just slightly prefer to be more on the short side of this one. And there's the trend line there, the trend line coming in around, at the moment, around 1658. You've got some chart support around the same area, 58 as well. So 58 is going to be important for gold. And then down below there, 53.9 as well. Top side of it takes out the overnight high, probably points it higher, 66.3. Through there, definitely looks a lot more bullish. That's the Friday peak there at 69.8. Let's take a look at gold. And oil similar. Again, look, there's the intraday rebound on Thursday and then gives it all up on Friday. Oil certainly looking a lot more negative of all of them. Looking more negative in here. And you go to the 30-minute, you have to say now, look, lower lows and lower highs, lower lows, lower highs, lower lows, lowers and highs. And then, a lower oil price, obviously positive for stock. So, this could easily go lower. I mean, for me, I think it's just down through, you can see this low over here. We've been flirting with this spike low over here. That's 85.42. That comes from early 5th of October. 85.42. We kind of nudged below there. I think, 85.20. And then we're nudged again below there. 85.18. So back down through there. Back down through 85.20, 85.18 looks a lot more negative for oil. Yeah, and I mean, I think this for me sets up far more like a short, definitely. All right. Any questions, anyone? Anyone got anything they want to add and want to throw in? Anyone can't anything they're looking at? That anything you didn't understand? If not, I'll give you a second to type. I'm not getting anything through. Okay, I'm going to wrap it up there, guys. I'm going to wish you all a great trading day. Stay safe out there. I'll be back with you tomorrow for another bull versus bear webinar, hopefully on time this time. Take care.